It's been a difficult couple of years for the cyber insurance market, and there have been no signs that cyber threats will be abating anytime soon. Here to discuss the latest results and trends in the cyber insurance market are Sridhar Manyem, Senior Director, and Christopher Graham, Senior Industry Analyst, both in AM Best industry research and analytics area. And Chris, let's start with you. How did cyber insurers perform the past year compared to the past couple of years?
2022 was a much improved year for cyber insurers all around. There were 2 years of a very hard market as far as pricing goes. 20% or more increases on average for pricing for both years brought about some much needed pricing relief overall. Tighter terms and conditions, increased retentions on policies, little less on the limits. Overall, tightened up everything for the insurers, and their calendar year results were much more in line with pre-pandemic results before the ransomware lockdown and vulnerabilities of remote working.
Sridhar, will cyber insurers be able to sustain this sort of performance?
Yeah, good question. As Chris pointed out, a great year for the cyber insurance market in terms of calendar year results. And if you add an expense load to the loss ratio, we estimate combined ratios between 70 and 80, depending on the company that you're talking about. So overall, great results. And as you know, in the property casualty industry, other companies are not going to sit in the sidelines watching these great profits going to cyber insurance lines. So we could expect to see a lot more entrants and a lot more capital, softening in prices, lax underwriting standards. So it depends on the time, hopefully if the insurers maintain the underwriting discipline that we see right now, we think the performance could be sustained. But if they fall into the typical underwriting cycle of, hey, great profitability, let's get in, underwriting standards become lax, criminals, become more sophisticated, then it might be a little bit more challenging to sustain the performance.
Chris, there's been a surge in premiums written by surplus lines insurers. What's driving that?
A couple things. One, the hard market itself did that. It became more difficult for a lot of insureds to get insurance in the admitted market, so the surplus lines insurers step in. Also, cyber lends itself well to surplus lines coverage, where policies can be crafted as needed to meet the insured's needs. So I would expect to see the surplus lines insurers hang around for a long time in this. It really suits well.
Sridhar, given some recent court rulings, where do things stand with the war exclusion, and what's the future of the war exclusion?
Yeah, I think when we see some of the more prominent insurers or organizations like Lloyd's that have come up with some standards for cyber wordings in terms of war exclusions and what kind of coverage you need to provide in terms of state actors, things like that. I think we have not seen any court rulings as of yet in terms of war exclusions, except for the NotPetya, which was more on the commercial property policy. We have not seen the war exclusions. How do you define an act of war? How do you define a state actor? Things like that being tested in a court of law. Who decides? I mean, there are definitions in some of these standards on who has to define a war and things like that, but it has never really been truly tested. So we have to wait and watch on the applicability of war exclusions to certain cyber attacks. And the other thing is the competitive nature of cyber. If you're having war exclusions, does it create a competitive disadvantage where other insurance companies are providing coverage with war exclusions, or even do you separate policies where you say this is a policy that doesn't have a war exclusion, and the war exclusion would be a separate add-on. War inclusion would be a separate add-on policy. So the coverage is still evolving.
Interesting. Chris, topic du jour, artificial intelligence. Opportunity or threat?
Both. Artificial intelligence certainly can play a role for insurers in resolving claims. It can play a role for any company, any individual doing business that can help them move things along faster. It also brings with it great exposure that anything, it's just another item that can be hacked. So where does that take you? Well, obviously then if it's more exposure, there's another insurance opportunity for the insurers to, capitalize on it. If they can find the coverage for the risk and price it right, they will be successful.
Yeah, I think large language models also create another risk, which is they can be taken advantage by bad actors in order to create deep fakes. And I don't even need to know programming. I can just go ask ChatGPT to write me a malware code, and I can easily use that in order to create some kind of a ransomware attack. So large language models do make it easy for cyber criminals to create these kind of deep fakes or malware code, etc. And so I think overall it could be a threat or an opportunity, and insurers, of course, can take advantage of this to underwrite better.
Amazing. Sridhar, Chris, thank you so much for taking the time to speak with us today.
Thanks for having me, John.
Thanks, John.
You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.